What's going on, Georgie?
What's up? What's up? I told you it will come. We have 21 agents on the drop of the dime. We were going to do the training in-house, and we ended up switching it to Zoom. So I'm glad everybody did. I'm actually going to send a mass text. You can start like in 2 minutes. So I'm sending a mass text to the whole brokerage. Guys, don't mind my appearance. I'm trying to be like Calito that works. Oh, no, not like Calito. Who could I mess with in here? Like, who's in here? Like Marvin that works from the house. Let's see who's in here. For sure. Who else is here? Nick, that's been AFK, away from keyboard. Kristen, who's been away. Who else we got in here? Chris Nin's on here. Alicia. All right. Love it. Love it. We got a good crowd. Let me send a text, Calito.
That'll do it.
Guys, also, if you haven't done so, make sure you fill out the surveys. I need full participation. Please continue to grow the brokerage. What are closing costs? All right, send the text. Let's see how many people come in with a text. All right, Carlos, if you want, start whenever. Alicia, when Carlos is ready, start it up.
All right. What's going on, guys? Thank you so much for joining. Really appreciate it. Thank you, George, for having me. Wes Gables, I'm here. My name is Carlos Tejero. For those who don't know me, I'm a mortgage loan officer for PRMG Dadeland. Lifestyle's preferred lending team. So I've been working now with Lifestyle for over 2 years, and I love it. Couldn't be happier. Thank you guys for all the referrals and the leads that you guys send me. I'm constantly closing loans with you guys. So, I want to give back in any way that I can, aside from, obviously closing the loans and handling the leads. I think that information is paramount when it comes to the business and the profession that we're in. I think it's very important that we know our craft, right? Whether, lending might not be your expertise and what you guys do, but it is connected to real estate, right? So as a real estate agent, it's very important, in my opinion, that you understand closing costs, because I get this question asked a lot of times, and some agents are confused about exactly who sets them, what they are, what's the amount, is there a set percentage? So I just want to go ahead and shed some light on this, and hopefully be able to educate you guys a little bit more on closing costs and just lending in general, and anything else that you guys need from me. So I have set the settings so that you're able to unmute yourself. So if you have a question, you could either write them down, wait to the end. I don't mind if you ask the question at the moment. That's fine with me too. I don't mind stopping I actually like it if you guys were to interact. So feel free. And you know, once again, thank you for joining, and we'll start. So at the end of this training, what I would like is that we are understanding, or like a, you know, a good understanding of closing costs and how to explain them to your buyers, right? At the end, that's what I would like to take away. And pretty much just in a summary, it's going to be what are closing costs, who pays for them, the explanation of down payment, the different types of down payments, title fees, escrows, and then lender fees. Okay, so these are just some of the things that we're going to touch on today. And as I said, hopefully shed some more light on this, you know, huge subject that involves all our transactions. Okay. Okay, so what are closing costs? So I like to personally, I like to break down closing costs in 4 different ways. Some people will do 3 and exclude down payment. You know, so however you just want to word it, but just know that if you think of it, your down payment is cash given at closing. So when you go under contract, you don't give your full down payment, you just give a deposit. But however you want to break it down is fine. Again, I like to just explain it as 4 closing costs, if you will. So there's no specific order either, but just so you know, we're all on the same page. So closing costs are a mix of things. One of them is going to be fees and reserves associated with purchasing a home. There's also going to be a portion is paid to the parties who help facilitate the loan, which is going to be the title company and the lending company, right? So those are 2 different parties involved in the same transaction who are going to have a fee or a cost associated with, you know, purchasing the home. And we'll go into that a little bit more in details as to what exactly their job is. So another portion is paid to the bank as a savings account to pay for your taxes and insurance. So part of your closing cost is going to be what they call an escrow or a reserve account. So when you close, you're obligated, unless you give 20% down or more on a conventional loan, to pay upfront insurance and taxes of that property. Okay. And then lastly, as I mentioned, your down payment is considered part of your closing costs as it goes directly towards your equity of the home. So this closing cost is the only one that will actually help you bring down the loan amount, right? It goes as part of the sale, and it goes to your equity. All the other costs go directly to the person, either the title or the lender. And then if not, they go into the bank for the reserve account. Does anybody have any questions so far? Remember, I believe you do have the ability to unmute yourself. So if you have any questions, please feel free. So who pays for closing costs? A lot of the times we have buyers, or I run into buyers personally, where unfortunately they've been told only 3.5% down, right? So they spend time saving 3.5% down, and then they think that they're ready to buy. But in Florida, at least, I know there's other states that do, you know, things a little bit differently, but in Florida, it's customary for the buyer to pay their closing costs. Okay. Now, FHA will allow sellers or an interested party to contribute 6% of the sales price towards a buyer's closing costs. That doesn't mean that they're going to, or that it's mandatory. It just means if you're able to negotiate, they're allowed to contribute that amount. Okay. So if you're purchasing, or if your buyer's purchasing a conventional loan and he's or she is giving 5% down, then the interested party is allowed to give 3% of the sales price towards the buyer's closing cost. If they give 10%, then they could also do like an FHA and give 6% a seller credit. Okay. Now, one of the kind of like things that I say to a buyer is pretty much when they're having trouble understanding why they have to pay closing costs, I just give them the scenario of, have you ever purchased a car before, Mr. Buyer? Yes. Okay, when you purchased the car, they usually told you, you know, 2,500 down, but you're also paying for at the end the taxes, the insurance, the registration, the dealership fee, the tag fee, delivery fee. So basically those are just costs associated with purchasing. So I explained that to them the same way they're buying a house. Yes, you have a house. Yes, you have your down payment, but you have costs associated with this purchase. You have other parties involved as well that will, provide a service for you to obtain this house. Same thing with the car. So with the car, it could be like a $30,000 car. You have your fees, maybe 6K. Here we're talking about $300,000 home, maybe around like 16K. Just to put things in perspective, is kind of like how I like to plant it to them, so they could have a better understanding and have something to associate it with. Because mostly everybody's purchased a car one time or not in their life, and they know about the tax, registration, title fees. Okay, so moving on. So down payment. I've broken down here and I've put the minimum of the down payment. And I include down payment again into this closing cost class, if you will, because it's money that no matter what the buyer has to bring to the table. So when you're preparing a buyer to purchase, we need to make them understand that they do have a minimum of a down payment, because unfortunately sometimes if it's they might think that they could purchase for free or like without money, but we do have down payments in place, which is the minimum that the government or the private lender is requiring in order to finance the majority of it. So for example, for an FHA loan, the minimum down payment is 3.5%. So the pretty much the government is going to finance the other 96.5. You have to come with your piece and do the 3.5% down payment. And then we're going to move on to the other closing costs that come with the transaction as well. So it's not just the 3.5, but it is part of it. For a conventional loan, if you're buying as a primary home, so primary home just means the house that you're either going to move into and leave the one that you had behind, or your first home, but your primary home, the one where you're going to live. So for conventional, we have programs as low as 3% down and 5%, which is the regular standard down payment for a conventional loan. If you're going to buy a conventional second home, if you're going to buy a second home, then you would give 10% down. If you're trying to buy an investment property, then it's 15% down, in addition to your closing costs. If you have if you're entitled to a VA loan, then it's 0% down. You still do have your closing costs as well. Okay, so that's just a little breakdown of the different types of down payments for each loan and scenario. Okay, so one of the first closing costs that we're gonna incur, that you're gonna see when I either send them an estimate or title will send them an estimate, is gonna be the title fees. So this could be done either by a title company or by an attorney who practices real estate. So title companies or real estate attorneys are helping the buyer and or seller to transfer the ownership from the seller to the buyer, while at the same time checking for any violations, fees, open permits, any lawsuits tied to the property. So if I'm gonna buy a house, right, and someone's gonna lend me money, which is the bank wants to make sure that whatever they're lending money on, whatever type of property, is free and clear. Meaning that, again, there's no violations tied to the house. They don't have any open permits. They don't owe anything, let's say, to the association, because not only will they incur those charges, but the person that they're lending the money, the buyer, is also gonna, deal with that. So here the title company swoops in and helps and makes sure that everybody has a nice and clean and smooth transaction. When something comes up and arises during the transaction, the title company will let all parties know, hey, listen, these are a few of the things pending to clear the file. So for that, obviously there's a fee, right? There's a service fee for this title company or these attorneys to do their job and go through all the paperwork in the county and make sure that everything, looks good. So that's going to be your first closing cost, call it, right? You have to pay for the title company. Title company could be chosen by the buyer, could be chosen by the seller. If not, you could get a recommendation from the realtor. I know here at Lifestyle, we have a great title company, New World. So reach out to them for any more specific title questions. Yeah, reach out to them for any more specific title questions. But yes, you will have title fees. So these are things, again, that we're starting to get into. So you could be more well-versed when you speak to your clients so that they know where these fees are coming from. And it's not just like the lender making it up and, you know, and things like that. So some of the charges you're going to see going to be the settlement fee, title insurance, recording fee, wire, state tax stamps, and lien search. Some of them are set by the title company and others are just prorations based on the loan amount. So they do have their specific calculation. When I give estimates to my clients, I do have that already built in. So I can tell you more or less a range of what the title company is going to charge. Okay, so that's your first closing cost, call it. Second, we have the lender. So lender could be a mortgage company, a bank, a credit union. It's whomever originates and or processes, underwrites, and ultimately funds the loan. So for working on, again, the funding and doing the loan and the origination and everything I mentioned, the processing and underwriting, there's a fee to that, right? Because you're getting pretty much a home, but you need help along the way, right? Unless you're buying cash. If you're buying cash, then you don't have any lender fees. I believe you still do have title fees, if I'm not mistaken, but obviously there's no lender fees. You didn't need us to facilitate that loan. If you do, then there are some charges. What I have listed right here are PRMG's prices. So, you know, I can't really compare them to anybody else's. So just know that this is our fee sheet pretty much. So when you have a buyer and, you know, you're going to refer them to me and they want to know, well, how much does the lender charge? You could refer back to this page because these are our fees. So the appraisal fee is going to be anywhere from $475 if it's a conventional or $525 if it's an FHA loan. There's a set processing fee of $495 and an underwriting fee of $990. So on every file that we have that's under contract that will, you know, ultimately turn into a closed loan, call it that funds, there was a processor who worked on it and an underwriter who worked on it. And this is pretty much how the branch is able to pay them, you know, by setting these fees, right? So as far as myself goes, since I'm a direct lender, I work similar to the buyer's agent where there's no fee for working with me directly. I work based on commission only if the loan closes. Okay, so you have a credit report fee of $25, and then you have what they call a loan discount, which is pretty much the rate if the buyer chooses to buy down. That'll be a separate charge that's not fixed. It's just depending on the market, credit, down payment, type of loan, type of house. Okay, that's why there's a question mark there because it really depends. But if they choose not to buy down, then that's pretty much it. I think it all comes out to like $19.95, if I'm not mistaken, with the appraisal, give or take. Any questions thus far? All right. So now we have escrows and reserves. So this is a really important one and one that's probably the most difficult to explain, but it's very important that we understand this because if I get this question a lot, I'm sure you guys get this question a lot as far as what are my closing costs? How much money do I need? If you guys understand this, you'll be better able to educate your client and let them know more or less what they're looking at. So one thing about me, if you've worked with me in the past before, I never lowball anything when it comes to like closing costs or down payment. And unfortunately, in the beginning, it might come to a bit of a shock to the buyer, but I'd rather them get that then than at closing and give them like a bad taste in the mouth that I told them something and then at the end it wasn't like that. I don't work that way. So I like just to be very upfront. And if you understand now what we're going to go into, this will give you a better sense of more or less kind of letting them know not only what's included, but how to calculate it. So again, when you purchase a home, conventional or FHA, unless you put 20% down or more, you're going to have what they call escrow. You could also call it a reserve account, escrow/reserves. And that's going to be a calculated portion of taxes and insurance collected at closing. Okay, so the way that we like to tell our buyers is think of it as opening a bank account, right? When you open a bank account, you cannot, you just can't open it with zero, right? You need to make a deposit. So the day of closing, you're going to open up a bank account. And in that bank account, what you're going to do is that you're going to put in advance taxes and insurance. And the reason for that is when the time comes around to pay taxes, like in November. So if I close the house in April, my first payment of my mortgage is not going to be till June. So when I start making my mortgage payments that include taxes, I would have only paid June, July, August, September, and October. So when the bank needs to pay the taxes in November, there's not enough cash there. And we don't go after the client and let them know, hey, you need to pay the taxes, it's 7 months. So what they do is the day of closing, which is already calculating the closing costs, they collect an additional 6 months or whatever they're going to be short, so that when November rolls around, the client's not short, and they're no wiser. They're just paying their mortgage monthly payment. They might find out and they'll know that the bank paid their taxes, but they didn't have to give any additional money. So that's pretty much what that's about. Depending on the month that you close, they're either going to collect more or less taxes up front. So they're going to collect also a year's worth of your insurance policy. So the day that you close, you paid up front for a full year. And then people ask me, so then that means I don't need to pay it monthly, right? No, you still need to pay it monthly, because when you're making your monthly payments in June, they're not going to the insurance company. They're just going to that bank account that you put, so that when next April rolls around, you have the 12 months payments and the bank directly goes and gives the money to the insurance carrier. You're not doing any of that legwork. All you did was pay upfront at closing. Okay? So I know it could be a quick complex in the beginning, but if you have any more questions or anything like that, we could keep going around it. But all you need to know pretty much is that when you're talking to a buyer about closing costs, you pretty much let them know that the lender has his own fees, the title is going to have his own fees, and you are going to pay a portion of the insurance that you choose and the taxes of the property. That's why it's very hard sometimes, guys, to just tell a buyer, oh, it's 3%, it's 4%. It's really variable, because if I like a house that might have $7,000 or $8,000 in taxes, and I'm in a month where I have to put 10 months of in addition to taxes, it's not the same as somebody who's buying a house that has maybe taxes at 3,500, who's buying in December, that only needs to put like 3 months of taxes. So closing costs, unfortunately, I wish it was just a set amount. That'd be great, but as of right now, it's not. So the insurance is also something else. They're paying a year's worth of insurance. We might have somebody buying a condo, that insurance is only going to be $800. But if you have somebody buying, again, a larger home, and the roof's outdated, they don't have any shutters, they don't have any security, then you're looking maybe like at a $3,500, $3,200 insurance policy, which goes to their closing cost. Okay, but the goal of this is not to now start telling your buyers exactly what the closing costs are and try to calculate it yourselves, but pretty much just have that understanding of what they are. Because I've seen a lot of times where buyers and sometimes the agents alike think that the lender is making up all the closing costs. Like, so if you send me a lead and they talk to me, and based on the house and the criteria, I tell them a set of closing costs, call it whatever, 22,000 including down payment, they might go back to you and be like, oh, listen, I went to your lender, but he's charging me 22,000. I went to this other bank and they said it was going to be 17. So then they have this misconception where I'm charging them 22, but really I'm taking into consideration a true amount of insurance, a true amount of taxes, where somebody else just might be like lowballing it. So my suggestion is always, if you're going to compare like lender to lender and closing costs, just compare that lender's closing costs. Everything else will be the same. The title company that they choose, they're going to charge you the same. The reserves and escrows is going to be the same because of taxes and insurance. So the only difference between those two lenders and their fees are going to be the lender fees, not the full amount. So that's something also to take into consideration. So remember, closing costs are not an exact percentage. It is customary for buyers to pay all of their closing costs. When you're having a challenge, having a buyer understanding, the closing costs, just explain it to them in the same manner as the car. Have you ever purchased a car? Yes, I have. Okay, well, remember you paid, your registration, your title fees, the dealership fee, the tag, and then those are pretty much the same thing for the house. You're gonna have closing costs associated with the purchase. And then ultimately, closing costs can and will vary depending on the lender, the taxes, the title, and insurances. So that's pretty much it for today's class. If you have any questions, let me know. I would also like to know, what, if anything, you found most valuable and what you'd like to learn more about, so I could set up, my next presentation based on something that you guys want to hear and have questions or are struggling with on a day-to-day. Questions?
When do you find out the closing costs?
When do you find out? So you find out, so you have a, all right, so when I pre-approve you, right, and you get pre-approved for like 350, I could more or less just eye it out based on a house of 350, their taxes and their insurance. So it'll be an approximate. Okay, once you get under contract, I'll know the exact taxes of the property. So now we're getting a little bit more structured. When the inspection comes out and we get insurance quotes, then that's otra etapa that now we pretty much, now we have our tax, we have our insurance, the appraisal comes out, well then the price either stays the same or changes. And then that's pretty much, i.e. we'll get the pre-CD from title. And then there we have almost close to closing. So pretty much under contract, but like, so if I pre-approve you for 350, I'm gonna tell you you're between this and this. It's not gonna be exact because of the reasons that I mentioned. We gotta wait for the title fees, we gotta make sure the insurances and the taxes, but more or less I'll give you a range. More or less $2,000 like apart. What else would you like to learn more about on the next time?
Maybe see a breakdown of what it costs looks like.
Okay, great. So yeah, so next time on the next class, whether it's more in detail of the closing cost, what I'll do is I'll show you guys my estimate and then see how it all breaks down. Georgie, you there? You have any questions? If not, I'm gonna just sign off and nothing. Thank you guys for having me. I appreciate it. I hope it was informative and you guys learned a lot. If you have any questions, feel to call me after this and let me know.
Thank you, Carlos. Thank you, Carlos, for coming on and holding it down. I'll tell Alicia to send me the recording once it's saved so I can email it to the whole brokerage.
Awesome.
I'm
gonna leave my my email here in the chat. So again, if you guys have any questions, concern, worries, whether even if you have a deal with another lender and you just want me to take a look at it, I'll be more than happy to. That's what I'm here for. So nothing, guys. Enjoy. Make sure you win the day, and let's go crush it. The second quarter is among us right now, April 1st. So hopefully you guys are in pace to meet your goals by the end of the year. If you still have not set goals, because maybe you just came into the industry new, I suggest you get with George, myself, anybody in leadership, and start setting up a plan, and that way you hold yourself accountable. All right. So thank you. Peace and love, and we'll be talking.